Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's May 17th. I'm Frank Curzio, host of the Wall Street Unplugged podcast. Why break down the headlines and tell you what's really moving these markets. So hope all you had a great Mother's Day last week. Took all the women out of my life to breakfast last Sunday. After breakfast, my daughters in my pool, hung out with them all afternoon, and then took them all to dinner. When I say all, it includes my wife, my two daughters, and my mother. I went to a nice steakhouse. It was their choice, not mine. You know, it was awesome. Would have been my choice as well. I like the place. Look, it's kind of funny when I think of women going to the steakhouse. I mean, when you first go on a date, it's rare for, I think, guys to take a woman to steakhouse or Wings or a place like that. You know, I think it's too early in the relationship. But I actually was having this conversation with my daughter. And I said, you know what? When you go on a date and really like the guy, you should order a steak or buffalo wings. Because if you do, he'll probably marry you in a year. Of course, you got to do this when you're 55 or older because I don't want you to get married before that. But guys love that. I mean, I'm not kidding. The garden salad with no croutons and you only eat half thing. It's just normal. We've seen it 100 times. It's pretty cool. Just say, hey, it's a first date and a girl's eating wings and has sauce everywhere. It's pretty cool. I think it's awesome. That's just me. I don't know. If you do go out, wings, steak, pulled pork sandwich with barbecue sauce coming out of the bun, stuff like that. Man, I could tell you guys are going to like that. That's cool. If you like the guy, just saying. Sometimes it might not work. Don't hold me to that. That's something I think is pretty cool. Anyway, got off track there for a minute. Getting back to my story. So we're eating at this restaurant. It's pretty jammed, like every restaurant on Mother's Day. And we wound up sitting in the middle of two booths because it was so crowded. So they set up tables in between booths, right? So it was a little stuffy kind of, you know, like right on top of people. And very close, you know, to one family. And now, you know, very loud, and there's a mother there that's kind of getting lit up, right? She's about 55, 60. She's drinking margaritas like that water, and she starts getting loud. Mind you, this is a pretty nice restaurant, which means a very stuffy atmosphere where people think kind of they're privileged, kind of places I like to avoid, but, you know, the staff is really cool, this place, and the food is great. But this lady's really getting loud now. I mean, shouting, "Happy Mother's Day, everyone! Happy Mother's Day, you go girls!" And she's very loud. And she's eating dinner with her daughter. And her daughter was probably in her 30s, I would guess. And then her granddaughter was there, and she was probably about 12. And it was a little embarrassed at the time. And then they had a baby with them who was about 2 years old. So, yeah, as she's getting loud, she taps my mother on the shoulder. She's like an arm's distance away. Taps her mother on the shoulders, you know, sit right next to her. She's like, "Hey, happy Mother's Day, ma'am. Are you enjoying the day?" And my mom's really cool. You know, she was just being very nice at the time. And yeah, it was cool. And she talked for like a minute and then, you know, went back to her seat. She drinks, you know, downs basically, you know, whatever. I think it was all margaritas. It was funny. And she's like, "Oh, what's going on?" She's just getting loud. And then she taps my mom again and starts talking to her. And then she did it like a third time, you know, like 5 minutes later. And, you know, my wife looks over to me. She's making like the WTF face, you know, like, "Hey, you know, should we do something?" Yeah, because it is getting a little annoying. And everyone's looking at this lady because she was so loud. And she's not cursing or anything. She's being nice. She's very, very loud. Now, for me, when I see something like this, or someone having fun, drinking a lot, or a wife or mother or a husband, whatever, throwing up on the street, I'm always sympathetic. I actually think it's pretty cool. I mean, look, we all get stressed out. I don't care who you are. We all get stressed out. We all say stupid things sometimes when we're mad. It's just refreshing to be the irresponsible person once in a while. Just be, all right, I need drinks. I need to get drunk. That's it. Just a break away from reality. For me, I've always found out that that's healthy, especially someone's coming on Wall Street. I mean, the pressure and how hard people work, I see breakdowns all the time. All the time. That's why even with my employees, I tell them when they go away for vacation, I don't want to hear from you. I don't check your emails. I don't want to hear from you. You need to get away because when you work here, it's really busy. It's a crazy atmosphere. We're trying to get out material all the time. It requires a whole team working together and sometimes can be, you know, a little bit stressful. So I make sure, like, hey, if you're going to go out, if you make sure you have beers, make sure you have fun, enjoy it, since we all work hard and we want to be successful. Anyway, that's how I look at it, because I never judge people. Because you should see half the crap that I did when I was younger. I definitely have no right to judge anyone. Besides that. So for me, I was being patient as this woman was talking to my mom. Again, it was all harmless. But my wife is getting uncomfortable, and so is my mom a little. So we finish eating at the same time. Gets good. Hear it out. And our waitress, who was really nice, right? She goes to their table first, and as she's going there, I said, "Can I have the check, please?" She's like, "Fine." And she goes back inside, and I see her. She has 2 checks in her hand, and she basically goes to this table again. And this lady's talking to her, who's left, like 10 minutes, and we're waiting. We're like, okay, we've been here for a while. It is a little bit annoying and stuff like that. We kind of want to get out of here. And yeah, we don't know this lady at all. And she turns around, and the waitress tells us, well, that lady just paid for an entire meal. And it was like $150. I mean, it was expensive. It was a very nice restaurant. Paid for the whole meal for us. I don't know if she felt the need to pay since she was having fun and being a little loud. Of course, I did what any person would do in this situation. I decided, I was like, hey, let me order some dessert for all of us since it's on her dime. I was just kidding. I actually tried to get them a gift certificate or even buy them dessert or something, to go, but they left really fast. I mean, once they paid for it, my mom and my daughter and my wife went up to her and said, "Thank you so much. You didn't have to do that." And they were talking to her for a good 5-10 minutes, and I'm waiting at the counter. I went to the bar to try to get them something, and they wound up leaving. But by the time I left, my mother and my wife were like best friends with her before. It was just pretty cool, right? But I'm telling this story because there's a lot to be said at that moment. Like being really quick to judge people, wanting to criticize people right away, getting very angry in a situation like that, not being understanding. I mean, that type of reaction right away is normal. But in the end, I truly believe most people want to do good things. I'm not preaching here. Just hear me out. Because I'm bringing this back to investing. I have a lot of people that ask me, how did I build such a huge network over my career? And this is one of the biggest reasons. I'm not sure I've ever mentioned this. So for me, I work in a hyper crazy and intense industry. You guys know that. I mean, it's investing, it's money, and man, you should know there are a lot of monster egos in our business. And those egos can, turn a lot of people off or piss people off. And I get other questions, not from listeners, but from analysts, like friends of mine who are in this business. They're like, "Oh, man, you talked to that person? You had them on your podcast? You hung out with them?" Like, why you talk to that guy? It's just crazy. I let their personal feelings really get in the way. Sometimes those personal feelings may include, jealousy, like the competitive juices are always flowing. You just don't like talking to arrogant people who always think they're right, which we see all the time, especially in this industry, which is basically a necessity, I guess, in our business, if you want to say, or anything financial related. After all, you're managing money, and maybe arrogant might be too strong of a word, but certainly very confident. But if you look across any place or any industry, I mean, look at, I always do sports analogies, the best athletes. You look at Jordan, you look at Tiger Woods, Gretzky, Kobe. I mean, these people were not nice when they played basketball against their opponents. I mean, they talked trash. They destroyed you. They didn't compliment you. They believed they were the best. You shouldn't even be on the court with them. That's why they were the greatest. I mean, you may say, "Oh, I don't like the personalities," or "I don't like the," but that's why you're the greatest. That's what happens. So you deal with a lot of crazy, arrogant people in all industries. But for me, I always looked at it this way. Arrogance is sometimes a form of insecurity. Maybe some of these people got picked on when they were younger, and now they're making it up by being somewhat of an authority figure, if you say, that people listen to. I don't know. Some people don't have great social skills because maybe they were brought up in a tough environment where they were bullied, or their parents really didn't give a shit about them. I don't know. But I see that happen often. Because when I get to actually know these people deep down, and I'd say even not more than 90% are really cool. They're just cool in their own way. And more important, I would say, when I'm looking at these people, I would say analysts, billionaires, market experts, they always have something to contribute to making me smarter. or help me become a better analyst. And some of those relationships, which most people would dismiss after the first conversation, which is normal, turn into not only really great relationships, but just people I can count on, that I can call at any time, and they'll get on the phone with me for 1 second to help me and discuss anything. Especially with my business, and starting my business, there's certain people that I call that, I've spoken to in the past, and just I don't know what I did, or it was just good conversations, and I tend on helping a lot of people with never asking anything in return, because I just feel like it comes back 10 times over. And these people right away help me out, give me great advice. This is what you should focus on. One person 2 years ago, after Stansbury, told me, a very close friend, look, Frank, I don't know if you're ready to start your own business. And a year later, he said, yes, now you're ready. And he was kind of right. He saw my head was in the clouds a little bit. I wasn't too sure what I wanted to do. I was thinking of my family. I'm like, I don't know if I want to do this yet. But then like a year later, I think he just saw it and said, no, you're ready. You're ready. Now you're ready. Very good friend. But you see a lot of crazy personalities in finance, and I should know. I mean, look, I've interviewed over 1,000. I've went back and actually tracked this, which is crazy, but over 1,000 experts on this podcast over the 10 plus years I've been doing it. I can tell you, when you guys go to conferences, you meet people for the first time, I would bet 9 out of 10 times, a lot of those guys or women, whoever conferences, they tend, they could be, sorry about the, a little, I won't curse or anything, but maybe a little bit, just pain in the asses. Maybe a little bit of, an ass. Because maybe they just flew out there on a day's notice. They just wrote up a presentation. They spoke for 30, 45 minutes, whatever. And you know what? They just need to dial down a little bit. Maybe grab a drink. But don't dismiss it right away. Wow, that guy's an idiot. That guy's this. That guy's terrible. I mean, wait for things to die down a little. Conferences I go to, these guys are having drinks at the hotel bar later on that day. And if you're walking by, just say, hey, you know what? I really loved your speech. Really appreciate it. And I can tell you, a lot of times that person will be like, hey, thanks a lot. Hey, you want to have a beer? I just talk to you, and the next thing you know, you build a relationship instead of you dismissing it after the guy just got off stage and you have 50 people pushing their way into him to try to get free advice. What do you think of this stock? What do you think of this stock? What do you think of this stock? And, for us, at least for me, I spend a lot of time in my presentation. It's got to be good. It's got to be exciting. I don't like wasting people's time. I hate going up there and someone just reads from their PowerPoint. I just want to get up there and say, just get off the stage. It's a waste. Everybody's sleeping. I hate wasting time. So for me, I spend a lot of time of it. And even for me, sometimes I'll come off the stage and I'm talking and I'm like, all right, let me get going. And some people just use that first reaction and say, wow, Curzio's a real douche, man. That guy, I thought he was cool. And later on, they'll see me hanging out at the bar and I'm talking to every single subscriber I have. So don't kind of like dismiss that, because, that's one of the ways I built up my network. Not being quick to judge people in the first 5 minutes of a conversation with them. I mean, if that was the case, I seriously believe my network would be about 80% less than what it is. But just getting to know these people a little better. It's helped me tremendously, not just over the past 10 years I've been doing this podcast, but over 20 years since I've been in this business. Because remember, guys, the more access you have, the more information you have. And the more information you have, the better decisions you're going to make. Which is pretty, I'd say, incredibly important. Especially for me, when the responsibility is making the right stock picks so subscribers and listeners can make money, which will benefit their families, benefit their retirement. It's a very big responsibility I take seriously. Just thought that was an interesting story, though, just to see this lady get up there, just talk and yell at the restaurant and everything. And it was so funny looking at my mom's face and my wife's face saying, oh, this lady's crazy. And she wound up paying for a whole entire dinner. Just pretty cool when you think about it. I don't know if that was a complete waste of story, but just showing you how I built my network. Don't dismiss people like right off the start, because look, people are going to be arrogant. They don't know you at first. Try to find them where it's dialed down a little bit, where it's not so much a pressure situation, and give some of these people a pass sometimes, because they may be even asked the first time, maybe the second time. But believe me, there's something in there that these analysts are on stage that can definitely contribute to making you a smarter investor. And you don't want that to get lost just because the guy was arrogant for 5 minutes the first time you met him. Now, speaking of networks, speaking of access, I have a great interview set up for you right now with Barry Cohen, who is our crypto analyst at Curzio Research that's launching his product, in just a few weeks. Barry has over 20 years experience working at hedge funds, actually managing money. By the way, these hedge funds are some of the largest in the industry that he worked for. The hedge fund managers, let's just say you heard of probably all of them. I'm having Barry on again because he's at the biggest crypto conference right now. It's being held in New York City. where there's over 8,000 attendees. They pay in the neighborhood of $2,500 a ticket. The conference being talked about all over the media. And Barry is a diehard when it comes to crypto. He's starting to attend every major conference. The last one he attended was in Miami a few months ago. We said it was like a party atmosphere, which he came on this podcast and reported live from. This conference is different. And I'm telling you, it's going to erase any doubts that blockchain and Bitcoin are just some crazy fad, especially when you see the list of speakers, sponsors, billionaires, Fortune 500 companies that are not just keynote speakers, but are actually implementing, building, spending lots of money to incorporate blockchain into their companies. It's very amazing when you hear the list of people and companies that are at this conference. It's an older demographic this time. It's not Miami. It was more of a party atmosphere. But Barry's here to give you the real-time story, the scoop, everything. The Blockchain Technology Conference at New York Hilton in New York City. It's being talked about a lot, but you're not seeing live broadcasts or anything, so it's going to give you an inside scoop. You definitely don't want to miss that interview. In my educational segment, I wanted to share a secret with you that has made me a lot of money in stocks, at least over the past decade. I haven't talked about it much because you don't see this trend happen often, but with today's incredibly volatile market, especially when we have earnings season, stocks are all over the place. I've seen this trend happen to several companies. Some of the names I'm going to share with you. And if you're able to spot this trend, you can sometimes buy your favorite stocks at a 10, 15, even 20% discount. I'm not talking about using options, but something that's been happening often during the last two earnings seasons. You know how much I love to educate you, or at least try to educate you. That's why I'm interviewing Barry Cohen from the World Series of Crypto Conferences. And let's get to that interview right now. Barry Cohen, thanks so much for joining us on the podcast again.
Oh, Frank, it's my pleasure to be here. Thanks for having me.
Well, I really appreciate it. What I love to do is try maybe a little bit of a unique service here where I try to interview, because I have a lot of contacts that go out there, boots on the ground like yourself, and you're at a very, really cool conference. Why don't you talk a little bit about the conference, what's going on, because it's something that you've been excited about. It seems like so far from the notes you've been sending me, we've talked the past couple of days, it's kind of living up to your expectations.
Yeah, it is living up to my expectations. I mean, first of all, just to, for listeners to kind of put this in perspective, last time we spoke, I was at the Miami conference. And the Miami conference was 2,000 people. This conference is 8,500 people. So it's 4 times larger than the Miami conference, and it's 3 times larger than the same conference here in New York last year.
Yeah, no, Barry, why that you're seeing so much interest, but more important, when we were talking, you were telling me about the big difference between the Miami conference and this conference, where Miami was kind of like a party atmosphere. This one seems like it's much more serious. And I was going through the sponsors and actually the speakers. You're looking at high-profile companies, high-profile speakers at this event.
Yeah, I mean, this Miami was I'll rephrase it again, like more of a party. I mean, you saw women walking around in bikinis, and the sponsors all drove up in Lamborghinis. Here in New York, I mean, it's all business. These are real business people looking for real solutions or building real solutions using the blockchain. And I would also say that when you're in the audience, you could very much sense how much more institutional it is. And I mean both from a business owner perspective, but I also mean from an investor perspective. There are far fewer average retail guys walking up the street. Lots of guys in suits and ties here today.
Well, you come from an institutional background, so explain that a little more. Where when people see institutions, they're like, okay, Citibank, Goldman Sachs, and everything, and then when you compare it to Miami, it's more maybe a lot of a younger crowd or different things like that. But when you say institution, is it more about how they're using blockchain strategies for their businesses? Because this is a big deal for the average investor. Maybe not for you, maybe not for because you explain this trend to me, and I always get my best information from you because I truly believe you're one of the best analysts in this industry and how hard you work. But for the regular person out there, they have big doubts about blockchain. They have big doubts of cryptocurrencies. We hear all these stories, more government regulations. But now you're telling me you're going to a conference where institutions are spending a ton of time explaining how they're going to use these technologies to basically, as growth initiatives and how they can implement it in their current business strategies.
Yeah. So I'll break down institutions into two camps, right? And the first one is from an investor perspective. So like normally when you think about investors, you think about the average guy, what's known as a retail customer. And then you think about institution customers. And institution customers can be things like private equity funds, venture capitalists. It could be large mutual fund companies, hedge funds, people who use other people's money professionally to invest. Those are institutions. So that's number one. Number two is real world businesses. So like you have IBM, Deloitte, Oracle, SAP. All these people are here. They weren't in Miami. And what I will tell you is when speaking to the head of the global financial leader for Deloitte, a woman named Linda, they're coming out with a survey, but she basically told me that when they did their survey of over 1,000 senior executives with companies that have $500 million of revenue or more, that blockchain now is considered top 5 strategic priority. So this is very real, and people are willing to, if they see a use case, put millions, if not tens of millions of dollars behind it.
Now, what are some of the takeaways that you're seeing? What are some of the things that people could look forward to that maybe are things that surprise you over the past couple of days that you're like, wow, this is something like, I really need to look into more. And I know how thorough your research is, and I know how much, you really love this industry. But is there anything that's really surprising other than, how serious this conference is, how many institutions are there, or just a few ideas, not necessarily investment ideas that you're like, wow, this really makes a lot of sense. This could be huge.
Yeah, I mean, I would say that there are 4. Like, so if I was going to write now, arguably 5. Okay, if I was going to list them, and they're not in any particular order, but I think that my takeaways are that oftentimes in the United States we turn a blind eye to the fact of how global things really are. And if I've taken away one thing about the blockchain so far, is that this is not a U.S. centric technology revolution. This is global. I'm meeting with guys from Hong Kong, Africa, Latin America, Eastern Europe, Western Europe, the United States, Canada, Mexico. This is a global phenomenon. The second thing is that I would say that it is definitely becoming more institutionalized. And again, I'll go back to both in terms of the investors that are around it, as well as the providers within it. The third thing that I would say is that people are very much focusing their time and energy on practical, tangible outcomes. That I know a lot of guys, and I'll just use this expression, who are building software to talk to Mars. That might be great, but it's not practical. And my walk away from my experience here this week is that practical, executable, simple, understandable, strategic use of the blockchain is where the money is going to go. The fourth thing that I would say is what's known as a user experience or user interface. So the lingo in the industry is UI for user interface and UX for user experience. It's critical to bring more and more everyday users of the blockchain on to really engage in making it easy. Really having a simple use. Like you can go on right now to Curzio Research and you can click on anything that you want, and anybody can do it. Blockchain is a little bit more difficult. It's not as user friendly, and so that's the fourth walk away. And the fifth walk away is I just came out of a regulatory meeting, and I would say that they really want to put together rules that encourage raising money in this space, but with a very heavy eye to ensuring that consumers aren't taken advantage of. So while people are fearful of the regulatory regime, and you and me, Frank, have talked about this for a long time. We talked about how regulations this year were going to become a bigger thing. It really feels as they want to be protective of the average investor, but they also really don't want to stifle innovation and capital formation. So if I had 5 walkaways, those would be my walkaways right now.
No, on a regulation front, it seems that you brought up a good point in the past, and I want to get everyone back on board here, that you're seeing other countries, I believe it was Switzerland, you said, that might be becoming a hub. I don't know if it's Switzerland, I think you said, but It seems like there's other places that are more, ahead of the curve here. And you brought up like, hey, like the Silicon Valley here, you have different little Silicon Valleys or whatever, but they're becoming the Silicon Valley where we're kind of being left behind in the U.S. How do you see the U.S. dealing with this after your regulatory meetings in terms of maybe a time frame, right? Because I've heard this before where regulations like, hey, we want to work with people, but when does it really become official? Because there's a massive market in the U.S. that want to get into these things, but you need that, right? I mean, people always say, you get the libertarians out there, less government, zero government is, you need regulatory, right? Just in case if anything happens, you want to make sure your money's safe and everything's safe. Do you have like a time frame when you really see the SEC coming down and saying, here's the beginning part, here's some of the rules or whatever? Because it just seems like there's a lot of clouds of smoke there and people are waiting for it's definitely going to lead to more money coming into the space through the U.S.
So yeah, that you touched on a lot of things. First of all, I'll go back to the word global, and because this is so global, Silicon Valley has been the leading incubator for technological evolution and revolution globally for the last 30 years. Blockchain is not a Silicon Valley-based project. In fact, actually, arguably, Silicon Valley has been somewhat left behind with blockchain. It really is global. And because it's global, the regulation, tax, and raising money has also become a global phenomenon. And so while the U.S. regulators do have the ability to reach people internationally, especially if they do something fraudulent with U.S. citizens, it's a lot more difficult than simply saying, I reside in Idaho, the company resides in Idaho. It's a much different experience. Timing-wise, they really haven't given out any timing. What they've done is they've made a variety of public pronouncements about feelings on a few subjects. There's a couple of enforcement actions that are widely known publicly. I'm sure there are private ones that we don't know about. But they really haven't set a timeline. Like nobody at the SEC has come out and say that we hope by December of 2018 to have created what's known as a regulatory sandbox. And for listeners who don't know what a regulatory sandbox is, a regulatory sandbox is basically when a country's regulator, could be about anything, creates a set of beginner rules, if you will, that allow companies and entities to operate with some degree of safety as long as they stay, as the expression is, inside that sandbox. Now, from an SEC perspective, they really haven't put together a regulatory sandbox. Now, one of the reasons why, and you brought up that Swiss town, Zug, one of the reasons places like Singapore or Switzerland have become so popular for blockchain development, blockchain company formation is they've actually put in place regulatory sandboxes. And so when you go there, you have a much more defined set of rules that if you operate in, you're going to be okay. You don't have that here yet in the U.S. You probably will. They just haven't given us a time frame for that.
Now, it'll be interesting when they do, actually, because I know it's going to be a lot of money. I know that coming into this market, even though there is, it's still red hot from what I hear, even the ICO market. But I guess when we look at this, is there – so you're seeing what I see is when I look at the speakers and when I look at the keynotes and the sponsors, we're looking at just a few to name: IBM, the Microsoft, Deutsche Bank, Citi, Deloitte, the U.S. Department of Treasury has members there, NASDAQ. Are these companies that they're investing in blockchain, is this a reason to invest in maybe a large cap stock? I understand and you understand that it's going to take a long time for revenues to come in, but when we look at the markets, when you do add a growth component, we could say Square's starting to process a lot of Bitcoin, and margins are still very small in it, but that added a growth component. If you look at NVIDIA too, right, when they talk about crypto, when you add a growth component, it does add value to a stock. Are these guys like light years away? Is this a reason for you to maybe purchase some of these stocks? Or is it just, hey, let's wait and see what these things could do? It's just going to provide a better service for people. But in the end, they're going to do this to make money, right?
Yeah, obviously, like a company like IBM or Intel, that's very different than, let's say, like a company like Square or even maybe a company like NVIDIA, because, with a company like Square, it's very clear that they've carved out a part of their business line that's very, very specific to transacting in Bitcoin and payments of Bitcoin, and they're going to show you that. A company like IBM or Microsoft or even a company like Intel, this is going to be a component of what they do, and it may end up growing into being an enormous component of what they do. But right now, it's just a component of what they do. So those might be great reasons to own those companies longer term. And certainly a great reason to start thinking about them today. But different companies are going to have more impact earlier in the cycle, and other companies are probably going to be longer term plays.
Now, I notice right now that the industries that blockchain could disrupt is obviously financial, right? Payment services, peer-to-peer, whatever, transfer of payments. You could see a lot of consulting firms that are in this as well. You see a lot of exchanges. Outside of those, are there a couple of industries that maybe caught you by surprise that said that, I might have answered this question, but I want to get a little more specific of maybe industries that you saw today or yesterday that you're saying, wow, I never thought of it that way, where this could disrupt more industries than you previously thought.
Yeah, I mean, I think there's a lot of industries where this is not only going to be potentially disruptive, but frankly, very additive. Like, just because you have a disruptive technology doesn't necessarily mean that the incumbent goes away. The incumbent can embrace disruptive technology and actually further entrench themselves as well. I mean, so for example, like FedEx is spending untold amounts of money on blockchain because really at the end of the day, it allows them to track and trace all 12 million. They have 12 million parcels that pass through their hands every day. It doubles during the holiday season. Blockchain is going to allow them to effectively track and trace from beginning to end in a way that it currently does, and it's going to be able to do it cheaper. When you get guys, there was some conversations with the guys from Coles, and they have a ton of intellectual property. But the whole intellectual property chain that exists in the United States is very cumbersome. Like, you can't do searches the right way. You can't be certain of provenance. Having a blockchain technology around intellectual property, could be very disruptive to the intellectual property market, but it could also really help large incumbent players that are very heavily dependent on IP to really secure their place, to actually be able to monetize what they own even greater than they have. The shipping industry is a great example, like being able to figure out where something comes from, make sure it's safe. The food industry, being able to trace your food basically from the farmer to your dinner table all the way through, food safety. The mortgage industry, from the time that you decide that you want to buy a home to the time that you pay it off. All of these industries and sub-industries have enormous expense bases, have a lot of different people that touch the product from beginning to end that you might be able to either get rid of or improve potentially with the use of blockchain. So it really can be, significant. There's no, there was a woman who was talking today from IBM, and she basically said today at the conference that by 2025, she sees, cryptocurrencies in the token markets being worth in the trillions. So these are very serious people in very serious positions that are responsible for a lot of very serious stuff with very serious clients, telling you that this market could be worth trillions of dollars over the next, 5 to 10 years.
Now, that's interesting, right, Barry? Because we're hearing and we're talking about blockchain a lot, but you just mentioned tokens, coins, stuff like that. And I guess if I would say, I think most people, but I'm not too sure. Maybe it's not. But when you say blockchain, a lot of people may have similarities to Bitcoin, which, blockchain is a technology that runs it behind, but Bitcoin is the main currency, right? Biggest, most liquid. But yet we're hearing people like Bill Gates, Warren Buffett, Jamie Dimon come out and say it's worthless, it's a Ponzi scheme, or whatever it is. What are your thoughts on this, and how does this relate to? Because wouldn't this add more credibility that Bitcoin is for real, or maybe it's something else that comes to becomes something bigger or more liquid? But what are your thoughts on that people are saying that? Because to me, it feels like we're talking about people who don't understand really the technology that much, but again, they are credible guys because they're great in a lot of other areas. But I'm curious to when you hear those thoughts, what do you think?
Yeah. So, you don't really hear Jamie Dimon saying that stuff anymore. because I think they realize that that's not a really good idea, since they're one of the largest investors in blockchain through their Quorum group, and they also are one of the largest participants in the market through some of their trading operations. So it's been surprisingly quiet, if you haven't noticed, with Jamie Dimon over the last 6 months. And I think it goes to the fact that somebody probably wrote a memo and put it on his desk, and he stopped talking about it. In terms of Warren Buffett and Munger, I mean, look, you got to remember that these guys have said all manner of things over the course of their lives. They're brilliant investors. I mean, I should remember half the things they've forgotten, but they don't really have a particularly good track record when it comes to investing in technology. I mean, Apple was wildly successful for how many years before they've decided now to buy shares? How many years was Microsoft like the number one software provider globally before they bought shares? I mean, technology is not exactly, they don't own Google, they don't own Facebook, they don't own anything, right? So technology is not exactly what you would describe the sweet spot for where they invest. And they also make some outlandish claims sometimes, which are completely contradictory with their own business model. Like, you know, they talk about derivatives being toxic waste, but they're some of the biggest users of those products. So I really kind of take some of that stuff with a huge grain of salt and, you know, focus on the facts and not the hyperbole.
No, it definitely makes sense. So does this, I guess, I don't know if I'm even saying this right. Does this, a conference like this that you go to, it seems to surprise you with the institution and amount of people talking, and that is statement by IBM and the trillions is kind of amazing. Does this add more credibility to you that Bitcoin could go a lot higher? Is there more credibility that maybe, you know, if it's Ethereum, Ripple, Zcash, whatever it is, of some of these currencies? Does it make you, you know, what are your personal takeaways? Because we know that you're launching a newsletter in a couple of weeks from this conference where, you know, you're going to see a lot more ICOs, a lot more coin tokens and different things. Does this make you dig a little further, or has this, you know, I guess I'm trying to say,
yeah, I totally understand where you're going. I totally understand where you're getting with it. So, like, it first of all, like, from a credibility perspective, like, I don't necessarily know whether you need institutional money to necessarily validate something, though. At the end of the day, when large institutions start investing in something, they're not doing it because they think it's going to disappear tomorrow or the next week. They're investing because they believe in it and they think it's going to be around for a while. So it does add credibility for the long haul. In terms of like particular coins, you know, I'm just going to get a little bit in the weeds about market dynamics. If you broke institutional investors up into large money and smaller pots of money are capable of investing in all forms of things. They can invest in large cap companies, mid cap companies, and small cap companies. And if you look at tokens and coins, you know, you have large cap, mid cap, and small cap coins. So smaller cap money can get into things that larger cap money can't. Most of the money in institutional land is very large. And so my guess is the top 20 coins are going to be where their focus is, because those are the only coins that have enough market cap and have enough liquidity for them to really be able to get into. Because remember, when they get into it, even if they, in the back of their head or even out loud, say, I'm going to own this for 10 years or 5 years or whatever it is, they always want to know that they can get out. And it's really hard for an institution to get into a token that has a $30 million or $100 million market cap and be able to say that. It's a lot easier with Bitcoin or Ethereum or Stellar or Zcash or any of those, because those are multi-billion-dollar market cap investments. So I would say that the top 20 coins are probably, you know, maybe the top 50 coins are going to be where most of the institutional money flows. So the Bitcoins of the world, again, the Ethereums, the Bitcoin Cashes, the Litecoins, the Zcash, things along those lines.
Now, you talked about, and I don't want you to give too much away here, but you came up with a value of where Bitcoin should be traded based on a model, and it's not based on you know, your model's not based on where gold prices are or anything like that. But you said, you know, I've come up with pretty much a model. Again, I don't want to give anything away here. Has that changed over the past like 6 months? Has that changed as, you know, we saw the fluctuations between Bitcoin go a lot higher, much lower, and is it? I mean, when you value something like this, right, even on the institutional side, say if it's an institutional report, they come up with a whole, all models, guys, it's like, sell side analysis, and they'll actually come up with a price target, right? So has this changed, or do you see Bitcoin going to a certain level? You think it can go higher over the past 6 months of what you learned? I'm just curious to see, because that's the biggest question, right? Nobody knows, but I have to ask it. And I know you're going to make fun of me offline when I ask this, but people want to know, where is Bitcoin going? Is this a buying opportunity? Should you be nervous because it came down so much and now it's kind of recouping some of those gains? And I just want to get your thoughts on that.
Well, first of all, I never make fun of you offline, and I'm never going to. So, I'm not going to give a lot away either about, kind of some of the work we did, but I wanted to actually try and break the value of Bitcoin up into bite-sized pieces. And one of the things that we were trying to think about, or I was trying to think about, is like what those bite-sized pieces are, perhaps, and how might we think about how to value them. And what I will say is, and people can argue about like whether it has merit or not. I argue about it all the time myself, and I invented it. Is that the model would suggest that Bitcoin is trading under fair value today, just on one portion of the value stream. And then when you add in things like digital gold and other payment applications, it should be trading at much higher value. So I would say that I think Bitcoin definitely has the ability to rebound in terms of its price. I've never really actually set like a hard firm price target per se, because there's a lot of variables that go into it. I don't think it's easy to kind of just say I think it's worth X. So people tend to do that. But here at these prices, I think that there's that it's an attractive investment to buy. Yeah.
No, okay, good. I'm glad, because I'm trying to get that out of you. So
I know you are, and I'm sure you're going to get it out of me. I have no doubt about it. I know you're going to get it.
That's for the newsletter people, but it's funny because they had a couple of people on CNBC earlier today, I guess, that were attending the conference, speaking at the conference, and that was the biggest thing. Okay, where do you think it is? And a lot of people are like, look, our business isn't based. We're not allowed to talk about where we think about where Bitcoin's heading, right? We just use volatility. Like there was one girl on there explaining. She was really good, actually. And again, they just came back and kept asking her. She's like, I really, I would suggest that, the top 5 or 10 are the ones to invest in probably. But we have to go, ones that are most liquid, which is good for our business. But we can't pick and choose, and that, we're not allowed to, based on regulation, to really promote a currency. But it's the question everybody wants, right? What's the answer to? So it's kind of funny. Now, the last thing here, could you give us maybe a little bit about the demographics, about the crowd? Is it an older crowd? Is it a younger crowd? I know you said it was kind of a younger crowd, I think, in Miami, but I saw some videos and pictures that you're sending me. It seems like it's more of, maybe average age, or what kind of people are attending this? Are you seeing a lot of foreigners attending this? A lot of U.S.-based investors? Yeah. I'm just curious to see that, to learn about that.
According to the sponsors of this, half the attendees are from outside the United States. So people actually flew here from around the world to just attend this conference. Half of them. So call it 4,000 plus. That's number one. And again, like that goes back to like my opening salvo about the global. I'm meeting people from Latin America, Central America, Canada, Asia, Africa, Eastern Europe, Western Europe, and of course here in the United States. And in terms of the demographics, it is heavily skewed still in terms of men, though there are more and more women that I'm meeting at these conferences. And I would say that it's a broad range of ages. Here versus Miami, I would say the crowd is older. And I think a lot of that has to do with the fact of, again, going back to one of the earlier themes of this call, it's feeling a little bit more institutionalized in terms of some of the people that are showing up at the conferences. And I think that's lending itself to maybe the crowd being a little older. But there's lots and lots of young people here as well.
No, that's great stuff. And I know you have lots of ideas to share when your newsletter gets launched in a couple of weeks. And Barry, do your thing. I know you're in the middle of lunch right now, taking this call. And I know that every minute's accounted for when you go to these things, because I know how much you love them. So I'm looking forward to hearing more information.
No, it's a fantastic conference. I'm really glad to be here.
No, it's awesome. All right. So, keep sending me notes. I'm going to try to post them on the website for everybody, and just maybe bullets and stuff of things that you've seen in pictures, which we love. And, looking forward to your newsletter.
Can I just leave you with one little tidbit? Is that okay?
Yeah, perfect. Yeah, bud.
So I sent you a picture. I don't know if you'll use it or not. I sent you a picture of the last breakout I was just in, and it was all about regulation, believe it or not. And it was standing room only. Now, I want to contrast this. I was in a breakout yesterday for real estate and the blockchain. Now, real estate globally is got a value of 200 to 250 trillion US dollars. And only a third of the very same room that I sent you a picture of the regulators was filled with people. So a market that is worth 200, let's call it 225 trillion US dollars, only a third of that room was filled. And it was standing room only, 4 people deep in the exact same room to hear about regulators. So talk about top of mind.
Wow, that's incredible. I mean, it's so early to this trend, which makes it exciting. You know, I mean, there's so many ways you can go. Every time, like you said, right, drink water, fire hose. It's just kind of everywhere you look. It's just where it's. I mean, you compare it to, and I wanted to go, but I think it's important because when you compare it to the internet, right? Say in the early '90s, and people were like, "Wow, email's great, and this is awesome." Holy, like nobody knew like GPS. GPS would be standard now. Nobody knew that the cloud, how big the cloud was, big data analytics, faster speeds, Expedia, being able to just type in and find millions of hotels anywhere. Is it right to think of it this way? Because it's so early in the trend, but it just seems like everywhere we turn, it's something that it could really impact hugely in the future.
Yeah, I mean, it's really early in the trend, and you're going to see a lot of iterations of this. Like you're going to have blockchain 1.0, blockchain 2.0, blockchain 3.0. We don't even know if the killer app has been even invented yet. Like, you don't know. You don't know, right? Like Amazon and Facebook and Google were not the first things out the door when the internet came around, right? They were the 15th thing out the door, right? So we have no idea yet. I mean, we have some idea, but we have really actually no idea. So it's very, very exciting stuff.
No, it's exciting. So, okay, I was going to say before, looking forward to your newsletter launch. I know a lot of people are looking forward to going to get some great information on it, and keep us updated with what's going on there. And again, I appreciate you giving us the real-time update at the conference, buddy.
Not at all. I really appreciate it. Thanks so very much.
All right, guys, great stuff from Barry. I like to have guests on when they're at conferences, giving you a real scoop, everything involved. And we're going to be posting a few stories on our website at curzioresearch.com, absolutely for free, since Barry's sending us some notes, pictures, videos. This way you can get a better feel of the conference and also read about stories you're not finding anywhere else. I mean, it's being mentioned a lot in the media, but there's not a lot of coverage actually at the event. Maybe I should say really big media. I mean, you're not seeing CNBC at this event. I don't think Bloomberg or Wall Street Journal at this event. Maybe they have a reporter or two, but nothing live where you see at the Ira Sohn conference or the Consumer Electronics Show. Things like that. We have all these people broadcasting live and give you the scoop. Sometimes you got to really dig and know where to go to find the good stories. Again, it's such an early trend. You're not seeing the major networks report live from this conference and giving you that ability to just see what's going on in real time. I really love doing that. So, be sure to check out our site for real-time updates from Barry. Also, we're launching his crypto newsletter just a few weeks. So if you're on our email list, we're going to be sending you a lot of free information, educational material leading up to this event. If you're not on our list, just go to our website at curzioresearch.com, put your email in a little box on the left-hand side, and you're going to get all this stuff for free. Just to introduce you to Barry, he's going to give you tips of how to buy cryptocurrencies, what exchange to use. Again, it's really going to be cool. Everything for free. If you're not on an email list, just go to our website, curzioresearch.com. Now, let's get to my educational segment. It's about buying stocks that get crushed during earnings season. It's actually a lot more than that. Not just buying stocks that are down, but looking at the reasons why these stocks got crushed. Because sometimes it can lead to an amazing buying opportunity. Especially in this market, right? What are we seeing? We're seeing stocks run up into the quarter, report very strong earnings, and sell off like 3, 4, 5%. We saw it with Square that came back. A lot of these companies come back. Saw it with Facebook, saw it with Google, saw it with NVIDIA, especially on the technology side. But if you're a company that reports earnings and you lower your guidance, these stocks get nailed, and they get nailed really, really bad. Now, when you see some of these stocks get crushed, it's important to look at the reasons why. Because if you really find some of the things underneath the hood, the reasons why it's coming down, and there's one reason that I love to see that pushes the stock down every time, and I can tell you stocks rebound. And I'm not talking about buying these stocks and holding them long term if they get crushed on earnings. And these gains happen very quickly, in just a few weeks, maybe a few months, but usually inside 6 to 12 months. But the one thing I look for when these companies miss earnings is if they missed earnings or lowered their guidance because they're spending more money to grow their businesses. This happens often, but in today's market, the last few quarters, because when companies miss, what happens? Nobody cares. They just see the miss. They push stocks down. You'll see a stock go down 7% pre-market because their guidance was lowered. Nobody looks at the reasons. They say, wow, maybe they reported, inline earnings and weaker guidance, and now the stock's getting nailed 5-7%. And then what happens? Algorithms trigger, and then you'll see the stock down 15-20% by the end of the day. It happens like crazy last 2 quarters. That's why I'm bringing this up now. But the volatility is pushing these stocks down by so much, it gives you an opportunity, especially if you see the reason why they miss it. If one of those reasons is, hey, you know what, we're starting to spend money on certain growth initiatives, it may be worth taking a closer look under the hood at what those initiatives really are. If you look at Facebook, and how many times we see Facebook fall after earnings, mostly because it was spending on new initiatives to grow the company. I mean, it's happened several times, if I had to guess, over the past 12 quarters. I know everybody focused on what happened last quarter. They focused on his testimony. It's a lot of the news flow. It's 24-hour news services. Everybody wants to, push all this crazy news into one thing. I mean, a Tesla accident is being all over the place. I mean, look, whether you short Tesla, you know how I feel about Tesla. I mean, if a person's looking at their phone where they have auto drive on, they crash. It really shouldn't be a story, but, they like to make a big story out of everything. That's fine. But if you look at Facebook and go back, which people probably forget, right? They're so used to what's happening in the moment of the last 12 quarters, which is which is 3 years. I mean, there was a lot of times I saw Facebook fall because they're spending more money to grow their business. That's a good thing. And that's a good thing if you got a good management team. If you have an experienced management team, it's not a bad thing. I mean, you have to look more in depth at it. It's just like, wow, these guys are spending money, buy the stocks down 20%. No. And last year, I recommended a company called Air Environment, AVAV. It's still in the portfolio, in my Curzio Venture portfolio. One of the largest drone manufacturer in the world. I mean, think about drones and going to the Consumer Electronics Show every year, 2014, 15, 16, drones flying everywhere, crazy. Huge consumer market. Everybody wanted to own a drone, have cameras, real estate, all this stuff. I'm very familiar with the industry. And I think it was 2016, I recommend the stock 2017, but mid-2016 or 2017, the stock started getting hammered because they lowered their earnings estimates. And they lowered it because they said, look, we're going to spend more money to get in key markets because they knew the consumer market was getting saturated, right? It was saturated considering there's probably about 300, 400 companies that sell drones at the Consumer Electronics Show. And they said, you know what, since we're one of the biggest and the best in the industry, we want to try to get into other markets. First, we want to look to expand internationally. We want to get more defense contracts. They're making counter drones that attack enemy drones. I mean, really great stuff, but products for defense companies and even the Department of Defense. And when I say international, I'm not talking about only on a consumer level, but they're selling drones to governments who are allies. And these initiatives took about 2 quarters, but the stock fell 40% on a company that had a pretty good balance sheet. Everything was cool, and they outlined it. Said, look, these are the markets we need to get into to grow long term. And we were able to pick it up at a huge discount. It only took 2 quarters. Today, we're up 125%, 120% on the stock. It's a triple-digit returns on a company that said, hey, you know what? We're doing the right thing for our business. You business owners out there, listen to this because you want to be in the flavor of the month, of course. It's exciting. But you're a business owner that plans on running a business for 10 years, 20 years. And this is how the big companies think. When you look at Exxon, when you look at IBM, where they're getting into cloud, big data, they're getting into blockchain, which we just heard from Barry. I mean, they're looking, okay, how is this going to be implemented? Where we're going to be 3 to 5 years from now? And yet we're in a market where everybody demands to be perfect every quarter. That's impossible. It's impossible. And you wonder why there's so many manipulation of earnings. I mean, they have all these contracts they could push into different quarters if they want. Why are they going to just throw them all into one quarter where a couple of customers might delay payments for another quarter and you miss earnings estimates by 15%. Your stock's up 20% because you reported a good quarter. The first quarter, second quarter, it's down 15%. Then it's up 20%. I mean, as an investor, how do you stay in these stocks, especially you have stops, but even as like, say, a 60-year-old investor who's, pretty much a perfect newsletter candidate who likes to buy stocks and hold on to stocks long term, and you're seeing a stock go up 10, 15% every earnings season, or, it's very difficult. But real companies like to look out long term and say, this is where we want our business to be because this is where the growth's going to be a couple of years from now. We need to be ahead of this. And that's what AeroVironment did. And they laid out that strategy. Nobody cared. What? You lowered earnings? What? You lowered guidance? Forget you. Stock got crushed. We picked it up at a discount. It's up triple digits, less than a year. But I'm bringing this up because I saw another one of our companies report earnings. And they said they won't be profitable this year. They expect to report 22 cents in earnings. And they said not going to be profitable now in 2018, but they're going to return to profitability next year. So you can imagine what happened to the stock. It was actually up 60% for us in 5 months and fell over 20% on the news. But when you look under the hood, they purchased two amazing companies that are going to give them AI capabilities, big data capabilities, and another one I won't give it away if I tell you what else they're going to do, but something that's also amazing technology. And they're spending big money to expand those platforms, which are going to result in monster profits for the company 12 to 18 months from now. That's when they're going to start seeing this. And they even said, listen, we're definitely going to return to profitability in 2019. Maybe we didn't communicate this well because we just purchased these companies over the last few months, but these are great platforms that we can really incorporate to our business, and we want to do it right and perfect. And nobody cared. This company reported in early May, and the stock got nailed. But you know what? The stock already is starting to recover those gains. People are starting to take a look at the hood and say, wait a minute, this is okay. They're spending money on growth initiatives. Okay, fine. We'll wait a couple of quarters, but once you're probably gonna see the benefits from this spending, I would say within 6 months. But again, people don't care. And we're seeing this I've seen it happen to about 3 or 4 different stocks in this market. And when I say 3 or 4 stocks, I'm thinking about high profile stocks. I see this happen in small caps all the time. But 3 or 4 companies that you heard of that we look at to purchase. Now, spending money is a good thing. If you have a great management team, their experience has a track record for building small companies into giants. And I'm talking about companies that just, let's take out some debt and buy back stock, which everybody could do, right? Get a monkey to do that. But we're talking about spending money on actual growth initiatives, hiring better talent, getting into major growth industries like AI, big data, cloud, acquiring companies and being able to integrate these companies into your core business right away, which is a very difficult thing to do if you're not used to acquiring companies. A lot of people call these roll-ups. But people who do roll-ups are great at acquiring and integrating companies. Okay, sometimes it's not always the best investment to do that, and a lot of roll-ups go to crap, as Mike Alkin, will let you know. But if you look at software companies, I mean, they're great at doing it. You look at Oracle, and man, just go on Oracle, go on Wikipedia, see how many companies they took over the past 10 years. They're great at taking them over, integrating them right away. That's great. You don't mind if a company's doing that. They're spending money, you know how to do it. That's fine. Because a lot of companies spending money right now that they generated simply from tax reforms. I mean, free cash. These companies may lower their earnings guidance going forward, which, stocks are going to get crushed for that. But take a closer look at the reasons why they're reducing these earnings or lowering these earnings. Because it's a great way to buy amazing companies, even a company like Intel, which increased their spending. Look at their spending, guys. Look it up over the last 3 years. CapEx spending for Intel. You find it on Google. Look at the dramatic increase in spending over the last 3 years. Now the company's trading what? Close to a 52-week high. But that spending was to get into every major growth market, which I paid close attention to because Intel doesn't have a history of spending money wisely. They're usually late to the party. They're spending on cloud, VR, AI 3 years ago. And not so much cloud where I could say this when most companies are just getting familiar with these industries, but AI, I mean, they're light years ahead of most people outside of NVIDIA when it comes to AI, which is everywhere. Look at Google, latest conferences in Google, and all this stuff going on. But you want these companies to spend money. When I see Intel and then I go see the Consumer Electronics Show and how they're displaying these new technologies, I'm like, whoa, this is Intel? Are you sure? I had to look twice. I was like, these guys the past 4 or 5 years have been horrible. Just getting into markets after everybody else, kind of what Apple's doing now. Apple's not leading the innovation market. They're following everybody into it. Not Intel. So, guys, if you see a name on your watch list that falls sharply after earnings because they lowered guidance, take a closer look at the reasons why. Don't just dismiss it. I mean, if you own it, it's going to be painful. I get it. But these companies may be on your watch list. You may, I use briefing.com all the time in my Facebook videos, live Facebook videos to show you it's a great tool. I don't get paid at all, but it just gives you stories. They tell you a highlight of each quarter, why companies are falling. And sometimes it's because, hey, we're spending more money on these certain initiatives. Nobody pays attention. The stock will 15, 20%. You know what? It's a great way to buy really great companies at a 15, 20, sometimes even, in AeroVironment, a 40% discount. And we got our returns back in 6 months, like 3 months pretty easily. In 6 months, the stock was up 30, 40%, and now we're up triple digits. And we're still holding on to a second half position. We sold half at 100%. The other half's up about 120%. And I think going long term, these markets are growing. These new markets they got into are growing fast. And it's exactly what this company wanted to do. Great management team, smart to look ahead. And we took advantage of everyone looking at a short-term price movement. And again, you get your favorite companies up at a steep discount. And a lot of times you could get those returns back in a week, 2 weeks, 3 weeks, maybe just a couple of months. It happens very, very quickly. Okay, guys, be sure to check out my Curzio Research Facebook page where I do live videos. Lots of fun stuff, lots of free things. Also, we have the new technology incorporated where you don't have to look at my face the whole time when I'm doing these videos, which is probably pretty cool. That's why I do radio. So you get to see actually the screen that I would give you an educational lesson on or how I'm looking at it. I try to use free sites so you guys could follow along and discussing ratios, different things to look at, breaking down earnings of big companies, why I like them, why I don't. A lot of stuff is for free. Why do I do this for free? Because we want to introduce Curzio Research to the masses. And to do that, sometimes you got to give away some really cool free stuff. And they see you're real and see, hey, these guys really work hard. The boots on the ground analysis. You're going to see boots on the ground stuff that I did with Michael Alkin last week, which was fantastic. You're going to see the car lots of massive. Went to Belmont Racetrack where there's thousands of cars, new cars in these lots. We went to 4 different lots to see these massive inventory of cars that have been sitting there for 6-9 months. I mean, just in the field analysis research, a lot of this stuff could be found on our Curzio Research Facebook page, which is really cool. So if you get a chance, go check it out. So, guys, that's it for me. Thanks so much for listening. I'll see you in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.